Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes boring but always interesting world of corporate filings. Today we are diving into Acacia Research Corporation's latest quarterly report. Let's see if their numbers are as thorny as their name. This report reveals a company experiencing a revenue surge thanks to strategic acquisitions, particularly in their manufacturing operations, while navigating a complex landscape of intellectual property licensing, energy investments, and fluctuating legal expenses. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to discuss our takes. This is a look at their results for the first 3 months of 2025, ending in March. Let's see how they performed. First, a quick note on their stock. As of May 7, 2025, they had about 96.2 million shares of common stock outstanding. This is just good to keep in mind as we look at their performance. Alright, let's dive into the numbers starting with the balance sheet. First thing we note is total assets jumped from 756.4 million to 801.6 million, a decent increase in just 3 months. Now let's go to specific line items. They are holding about 272 million in cash and equivalents, a slight dip but nothing too serious there. That will allow them to cover quite a few expenses. Here's a big one. Accounts receivable, which is the money owed to them, skyrocketed from 26.9 million to 95.7 million. This means they sold a lot more recently, but it also means that collection is outstanding. We'll have to keep an eye on that. Goodwill related to their previous deals actually decreased from 29.3 million to 25.6 million. Warren Buffett doesn't like the accounting games with it, and we are not sure what that means just by itself. Turning to the liabilities side, their debt level with their term loan and revolving credit facility is around 45 million. Seems stable and controlled. Let's move into the income statement. The income statement is where we see the actual earnings. Here's the key number. Total revenues jumped from 24.3 million to a whopping 124.4 million. That is more than 5 times increase. That is a great sign on paper. Let's scroll to find out what contributed to this surge. Their intellectual property operations revenue nearly quintupled. It went from 13.6 million to almost 70 million. Looks like their patent portfolio is paying off big time. Their energy operations also had a big jump, going from 1 million to 18.3 million. Their investment in benchmarks seems to be working out. They are now generating 28 million in manufacturing operations. However, we didn't have any data to compare. Total costs and expenses also ballooned from 26.4 million to 86.1 million. Looks like their IP, energy, and manufacturing operations came at a cost. After factoring in the various gains, expenses, and taxes, they ended up with a net income of 24.3 million. Last year, they had 186,000 loss for the same period, so that is a great bump from them. This translates to earnings per share from almost 0 to 25 cents. That's what Wall Street wants to see. Alright, statements of cash flows time. This is as important as statement of operations. Did they actually collect the cash? Operating activities, however, went from a positive 54.8 million to just 2.4 million, meaning they actually got a lot less cash from core operations even if they were profitable on paper. Not everything is said by net profit, so that's a good example. Cash from investing also went from a positive 42 million to just 1 million due to changes in their investment portfolio. Their financing also consumed cash from thus 1.8 to 6 million. End result, their cash at hand barely budged from 273 million to 271 million, meaning they are not turning sales and revenue into more cash at their bank. Jumping to statement of changes in stockholder equity, as of March 31, 2025, they had about 96.2 million shares outstanding. In short, this statement seems pretty standard with not much to discuss, so let's continue to the last part of the report. Time to take a look at intangible assets. Their intangible assets have a weighted amortization period around 5 to 7 years. Amortization reduces income, so this tells us how quickly these assets become less valuable on their balance sheet. As always, let's check the risks that they disclose, and there is a new risk as follows. They now recognize that trade policies impact their new manufacturing operations business and the risk of it. They're worried about costs and customers delaying purchases. Lastly, we'll scroll to the segment reporting to see how each business division did individually. As stated previously, their largest segment, intellectual property operations, had massive revenue and income growth for the 3 months, although they didn't turn the actual operating cash flow to increase due to increase in legal fees and royalties. As all their abilities to significant unobservable input scroll, they have certain fair value assumptions that are subject to change. In short, the value of assets at their holdings is subject to change. Now taking it all together, Acacia is at an interesting point. On one hand, their revenues show great numbers, primarily due to their intellectual property segment, meaning their patents monetization strategy might be showing results finally. The other segment, especially energy, is benefiting from economies of scale with the new additions of new assets. On the other hand, they are not yet turning the increase in revenue into more cash, having their cash at hand remained relatively flat. Of their past actions and debt could limit how quickly they can grow. I think one of the critical factors for them to keep growing is that they need to actually find more good IP for their intellectual property operations. As that seems to be where they are printing money, it also key will be to understand how their recent acquisitions in manufacturing and energy operations align with their goals. That concludes our breakdown. What are your thoughts on Acacia Research Corporation's future? Let us know in the comments. If you enjoyed this detailed analysis, please hit the like button and subscribe for more content. Also, don't forget to check out our Discord community where we discuss the latest filings and trends, linked in the description below. Thanks for watching and see you in the next video.